Loren, let's go to the next test. We have got the RMD test. What does that mean?
Well, this is the required minimum distribution test, which what this means is from your pre-tax retirement account. So we're talking about your IRAs, your pre-tax 401k plans. At age 72 now, you are mandated to take distributions from those accounts, and you're mandated to pay taxes on those distributions. That's the whole reason we have to take the distribution, so it becomes a taxable event. This is money that you've never paid taxes on before. So there's a lot that goes into these required minimum distributions from a planning standpoint. We start with our families planning for these required minimum distributions as soon as we meet them. As soon as we start building their very first retirement plan, we're already projecting forward, trying to determine how much they're going to be mandated to take out, and can we decrease that mandate. And there's a whole host of strategies that we implement when it makes sense to help alleviate that pain of these RMDs. I call this age 72 time, the RMD time. This is when that tax torpedo hits, because this is when a lot of people lose control over what tax bracket they're in. Because at 72, you've already turned on your Social Security, you're not going to turn that off. If you have a pension, you've already turned that on, you're not going to turn that off. And then you have a mandate to take out more taxable income, which is going to set your minimum tax bracket basically from there on out. So now it's a matter of the planning around RMDs is a matter of taking control over your resources and trying to take control over your future tax brackets. And it involves a lot of heavy planning as soon as you can get started.
When I hear terms, Chawn, like mandated and required, it's kind of hard to see that you have any control over these RMDs, but there are some strategies that you can apply to a retirement plan.
Yeah, there are. RMDs are not necessarily a bad thing, but you've stressed, Loren, that we want the control. If all things being equal, I'd rather our families be in control of showing how much income they're going to realize for a certain year and what marginal tax rate they're going to be in. So part of what we do, Loren, you mentioned it's something we start looking at right away. The more time you have to implement these decisions and strategies, the more time you have to plan, the stronger of a position you're going to be in. So Roth conversions is a big part of what we do to help alleviate or address required minimum distribution. So if you have a certain number of years and a certain amount of time to do Roth conversions, you're going to position yourself such that your RMDs will be lower at age 72 and beyond throughout your retirement journey. RMDs are only required on pre-tax dollars, so that's essentially what a Roth conversion is. We're taking those pre-tax retirement savings, we're picking them up, dropping them over into a Roth account, Roth IRA, and now those are going to grow tax-free forever, and then they're not subject to these RMDs at age 72 and beyond.
And another strategy to alleviate RMDs is the QCD.
Yeah, the QCDs is a big one, especially in today's tax environment where over 90% of Americans are claiming a standard deduction. They're not itemizing. So making charitable contributions, many people are not receiving a tax benefit from that. They're still doing it because you still want to help your community and donate to charities, but the qualified charitable distribution allows you to do both. Still make donations to your charities, but receive a tax benefit. When you make a QCD, it's a distribution of your RMD, your required minimum distribution, direct to a charity. You do not have to pay taxes on that distribution because it goes to the charity. The charity doesn't pay taxes on it either, and it suffices what you're mandated to take out. So if your RMD is $10,000, you do a $2,000 QCD to a charity, then you don't pay taxes on the $2,000. It goes towards the $10,000 you're required to take out. You're happy, the charity's happy, you're helping your community, and you're doing what you're supposed to be doing according to the IRS. Thank you for watching this clip of Retiring Today, and don't forget to subscribe. If you have questions about your retirement plan, take advantage of the complimentary 15-minute retirement checkup phone call.